Hey, it's Todd Ault. It's June 11th. What may be the greatest day ever for me personally and for the people I know. We'll find out about that soon, why that's such a great day. I can't go into the details, but it may not be the greatest day ever, not as great as the day my daughter was born, my son was born, or my twins are born, or the day I married my wife, but it's in the top 25 or 30. What do you think, Marshall?
Definitely.
Jason's in the house. What's up, buddy?
Hey, man, grinding it out, putting on crazy trades, making money.
Yeah.
RCON, you know.
Crypto Joe joins us today.
What's up, brother?
It is a Friday, June 11th. Look at Marshall, always looking dapper. Look what he's got in the background, this guy. He's like a prolific marketer. See that? Is like his picture like this in the background.
It's the first thing I noticed.
Pretty thing up there. Look at that. Always thinking of the macro.
It's fresh.
Hey, Skyla, what's up?
Hey, it's Friday. I'm in a great mood.
Hey, welcome to everyone on KEIB, Los Angeles and Orange County, 1150 AM, the Patriot Network. The Patriot Network. Also, you can get us on, what is that? That iHeartRadio app, too, right?
Yeah.
It's 1 p.m. on a Sunday.
Overseas, they can talk. Oh, thank you all the military.
All the troops out there, you can listen to us on the Patriot Network if you want to. Pass it along. It's Sunday for some people, but today it's Friday for us. Yes, those on the radio, you're listening to a recorded show, but the information is still good. We are watching my son graduate from UCLA. He's walking today. Still worried about COVID, so they won't let that many people there at the graduation. Make a lot of sense to you? It's outdoors.
It's ridiculous.
You know COVID, how it just spreads outdoors everywhere?
Yeah, well, I mean, the same. It spreads above like 4 feet. That's why you can sit down at a table without a mask.
Is that true? When you go into a restaurant
That's sarcastic.
and you're sitting down, it only spreads 4 feet and above?
Well, no, as soon as you sit down, it stops spreading.
I keep getting told it's science.
But if there's a curfew at 10 and you got to be wrapped up in your blinky in your bed at 10:01, COVID comes and gets you like the boogeyman. So
Yes.
you got to be careful about those curfews. Adhere to those tyrants from Michigan, California, New York, all those tyrants and their power. They just won't let go of their power. We need to stand up against these people. Yeah, trust the science. Okay. You see what's happening in those emails from Dr. Fauci. I digress.
I think we're all over the map, man. What's going on here?
I don't know. Hey, Marshall, what's up?
Hey, how we doing, buddy?
I got a question for you. Did you see that?
Hold on a second.
Go
Hold
ahead.
on a second. Hold on. Now, did we load up the right things here?
We got them all.
I think
today
you're given everything.
is Crypto Joe's birthday.
Oh, happy
How do we
birthday.
play birthday music?
Thanks, Marshall.
What do we have here?
I don't know. We have birthday music.
I'm going to tell everybody I'm only as old as you right now.
What are you old? How old are you today?
I'm going to go with 39ish.
Yeah, we know you're
39-ish.
49 though. 49 years old.
You know the former Yankee, the great left-handed pitcher that wore number 49? I know Marshall probably knows.
Who was it?
Louisiana Lightning?
Oh, really?
No, you don't know him?
No.
I try not to keep
Louisiana
track of any
Lightning?
Yankee.
Marshall, I'll give you a shot.
Wait, are you talking about a New York Yankee?
Yeah. Number 49.
Sidearm pitcher?
Nope, just lefty, 3/4. They called him Louisiana Lightning. He was good. He was really good.
I wanted to say Dave Righetti. Who is it?
Close. Ron Guidry.
Guidry, okay.
All right.
Yeah, that makes sense.
He's a beast. What?
You know that I found out that I don't know if I should actually say that though. You know,
Careful.
what's her name's sister was married to a famous baseball player.
Oh, yeah.
Yeah.
Yeah, we'll leave it at that.
Want to leave it at that?
Yeah. We don't want to. No, we don't want to go there.
I thought it was an interesting story.
It's a great story, but
Hey, is the market closed yet?
right now it just happened.
Let's go to the market real close and cover that real quickly.
Got it right here. Let's write some data down. Dow was 34,480, up 14. And we got the Nasdaq 14,069, up 49 points. S&P 4247, up 8 points. That's another all-time high S&P, if I recall. It looks, yeah, that's right. And what else we got? Bitcoin time on air 37,260. Ethereum 2,400. Marshall, the Ethereum to Bitcoin ratio is starting to spread out 15.52 to 1. Gold was 1878, down $17. $28.06 for silver, up 2 cents. Copper up 6 cents, $4.54. The big story of the day: oil, testing almost 71 now for a barrel of oil. That's all I got. Let's see. Todd, you want to talk about some stocks? What do you want to do?
I don't know if I could be more distracted.
I know, that's okay.
You know, I gotta get undistracted. I'm getting text messages, and you know what's going on here. Breaking news: the S&P ekes out another record close. You know, if you're at $4,001, and then you go to $4,002, it could be another record close. The
Every
market's
time.
not moving. It's not doing much.
That's what they're doing.
I mean, to all fairness to everybody listening to the show, it was an interesting week. We had a good week.
Really
a lot
good
of these meme stocks are all over the place.
Yeah, they are.
But I still go back to where I was May and June, kind of doldrums. Now, I'm wrong about the doldrum part, but the overall market hasn't done much.
You know why that's not doldrums? It's the biotech sector is literally carrying the market.
Biotech's on fire.
Yeah.
Fuego.
Yep.
Absolutely insane. What happened to ANVS today?
Oh, ANVS and SAVA, they both went crazy.
Those are Alzheimer's stocks.
They are most definitely
Yeah,
Alzheimer's stocks.
wow.
You know, Biogen had that big run up. They're close to 400 still. Pretty good strength holding that $400 range.
ANVS, Cassava up to 77 today. Looks like it hit 85
Monster.
intraday. Right? Can we pull that up on the chart real quick? Let's look at that. Yeah, that's $85. They got an early stage Alzheimer's drug.
ANVS actually went higher than that.
I'm in a good mood about this, by the way.
ANVS. Take a look. Take a look. And for the radio listeners on this stock,
Holy Toledo!
yeah,
$13 to $91.
91 for the ANVS. Primarily in the pipeline is the Alzheimer's drug. It's like ALZN or something like that.
Wow.
Yeah, interesting moves today. The biotech sector again was on fire. We happen to
Take a look at that, Joe.
Here you go, Joe. We happen to have a couple of biotechs. AEZS was.
Does that look real to you?
No, dude, it's fake.
It's amazing to me.
Unbelievable.
We get spammed so much with such total absolute, like, what is that, phishing?
Yeah, and they try and make it look like us. That's why there's a big yellow bar across every email you get that says, this comes from outside your organization. Do not open if you did not know where it came from.
It's pretty good. It's pretty good advice.
Yeah.
Let's get back on the stocks. So ANVS was, it hit about 94 and some change. If you look at the 1 month, let's look at the 1 month. This thing was in the 20s. What's its market cap now?
You got it there?
Yeah.
Because if not, I can look it up here.
It says its market cap. I don't believe that.
Now ANVS has a market cap of 724 million. It's only 5.49 million shares in the float, and it's close to 8 million shares fully outstanding.
Really?
Yeah. So, did it have news today though? They are going to present at the BioDigital conference that's coming up. I just think it was the overall sector that was just lifted by a couple of different drugs. You know, yesterday that ORPH went parabolic,
Right.
up like 900%. Take a look at it now.
ORPH?
It went $4 to $77. Where is it today? I don't like to use this term, but good Lord, look at that move.
Oh my God, it's back down
It's
to
$9.
So you went from 4 to 77 to 9?
Yes. Wow. Pull up the 5-day. Well, you can see it. Yeah, pull up the 5-day. Yeah, look at that.
Look at that, pull that chart up. That's called sitting on a spot more than a spike.
That's
Wow.
That's a massive pump and
Dump.
dump.
Yep. I don't know who's dumping that stuff.
I don't know. You know how biotechs can be, though. You
Right.
know, it's ultimately boom or bust. You know that. We look at the science of the drugs. You look at the capital that's in the pipeline as far as for the research and development. We look at the overall balance sheet. We look at how heavy they are as far as monthly burn rate of the company itself. Is there a lot of bloat, a lot of middle management, a lot of stuff that's going on there that they don't need? Like how fiscally conservative is the company? They should be fiscally conservative until they get that booming FDA approval. I mean, that's just simple fundamentals. If you have a company, any company, and you're just not making any money, you think that you would kind of batten down the hatches and be a little more fiscally conservative until you start showing a profit. I mean, that's just my thoughts.
Mm-hmm. OEG down a penny. LMNL up 2 cents. Novus 250. CLBS. AEZS. LGHL. LGHL pulled back today.
Yeah, I wanted to add to
What
that
happened to
position.
crypto?
Crypto was just kind of flat today. I didn't see a lot of news that was bullish. I did see a couple of things. Joe, you saw a couple of things, I'm sure.
I did. I mean, the one that I've seen a lot of things. JP Morgan's out there again spreading, I don't know if it's a false narrative, but it is what it is. They say that there's a backwardization and that Bitcoin and Ethereum have unusual activity not seen, backing off from 50 to 30. And if you watch the Bitcoin charts traditionally from all the way through the years, there's always a back off. It always happens. I mean,
yeah, for sure. I mean, we can look at
and there are big back offs. I mean, sometimes Marshall's probably got a little bit more, but I think the biggest one ever was like 94%, and that was after the second split.
Well, here I have and Nick, I have the 3-month chart here. We got 63.
It's 37.26.
Well, yeah, look, I mean, there's the, I like this, by the way, this bitcointicker.co. This is my go-to chart. 3-month chart here, 63,480, and, today's price.
Marshall, I know these things, Satoshis, these smaller, I apologize, geez, right in the middle of this IPO.
It's no big deal. We got one more time. Nick, hit me with that chart one more time. On the 3-hour chart, though, looking pretty bullish.
Yeah. Yeah.
Yeah, that's fine. Yeah, we're good. I just wanted to get him outside. All right. The big boss man had to step out for some business, and we'll just continue here. Marshall, let's go to you on the actual Bitcoin chart. I know you've been very bullish on Bitcoin. In fact, you've made a nice investment in Bitcoin. I'm not going to disclose that. That's your personal stuff, but I know you are a bull. I'm a bull. Joe's a bull. What are your thoughts on this 30 to 40 range? You see a lot of consolidation. What do you think here?
Yeah, I think it's just a I think the best indicator that we've seen about this range has been last week, the amount of coins that went off exchanges. So there was 22,000 coins that last week went off exchanges, and that means they're either going into cold storage or they're going into custody. They can't be sold if they're not on an exchange.
So do you think, I like that. I like that's very bullish. Do you think there's a couple reasons for that? Like just what comes to mind is maybe people are a little fearful of, I don't want to say the C word because it goes back to gold and silver, but I'll say it, confiscation. I mean, how is that really possible?
Just happened.
Well, that was a little different because that was a criminal activity. But I'm thinking about everyday Americans, everyday global citizens that pay their taxes, that do things the right way, and then they're not rewarded. They're actually, penalized for that by demonizing this coin and this technology and this storage of wealth. I'm not a fan of that.
If there's a confiscation, then we might as well just be in Mad Max Thunderdome, because they're going to have to confiscate coins from some of the smartest money and biggest institutions in the world.
So
we forget that it's not just retail investors and geeks in a computer programming room that own Bitcoin now. It's the wealthiest families and institutions on earth.
Skyla, let's go to you for your generation. Do you and your friends and people are they invested in cryptocurrency?
Yeah, actually, like a lot of them are. Yeah.
Now, so keeping that in mind, they're also invested in cannabis too, I'm sure. Stocks that are cannabis or
some
of them?
less than crypto for sure.
Gotcha. Oh, that's interesting. I mean, that's one thing. If we can transcend generations with cryptocurrency, and I think we can. I mean, boomers buying crypto. Gen X kind of gets ignored. I think, Marshall, you and you're Gen X too, right?
Yeah.
I mean, we just kind of forgotten generation. Millennials, obviously, and then Zoomers, which is Gen Z. You're Gen Z, right? Yeah, you're Gen Z. Okay, so if we can transcend all generations and make this a opportunity for people to store wealth, invest, I think that's a win-win. Talking about precious metals, I'm a bull on precious metals. Most of the time, precious metals are perceived as an investment for the old folks, or some other international investments. I know, the Chinese love gold. India, the citizens love gold there, but not so much in America. And it's just kind of interesting to me that people, it seems to me as a country as a whole, we're just a lot more gamblers in this country. Like, we don't get a lot of yield on gold. We're not interested. We want moons. We want rocket emojis. I mean, we want stuff that moves 100% every day. That's what they've been conditioned to believe.
Yep.
It's crazy.
Yeah, we're not long-term. Listen, we're not long-term investors. We're not long-term planners. We're not savers. We're a renter nation. We're not an ownership nation anymore. People are looking for a quick buck. They're in and out of trades. They don't have a macro point of view, and they don't really understand necessarily how wealth is built long term.
It does.
So that's why they wouldn't. Everybody knows wealth is built in assets. It's not built moving in and out of stocks every single day. It's in creating and accumulating large positions in assets that move your way over a long period of time. Like, the greatest macro play for the past 30 years has been one play, and it's made people billions and billions of dollars, and it's been bonds. But if you talk about the markets over the past 30 years, everyone's going to talk to you about Amazon and tech stocks, because it's almost like there's an attention span issue. But I mean, we know that we all know that bond prices go up when interest rates go down and vice versa. So like in 1987, once we started cutting rates, what happened? We cut rates that went to zero for 30 years. The big macro players like the Novogratz and the Soroses and the Tudor Jones and the Druckenmillers accumulated massive positions in bonds and just sat on it for 30 years and made more money than everybody. So it's like I think it's a philosophy that change that needs to occur, because we're not thinking long term, and that's our problem. And that's the rise of the central bank.
By the way, I have clients. Well, see, I used to be a broker many years ago. I have people I invest with, and they are so hyper-focused short-term now, Marshall. It's absurd. I know the ones that are smart are putting money away, and they're buying the FANG stocks. They've owned them for years. But it's tough, because when you watch the market, especially like a CNBC, they're focused on what's moving right now. Mm-hmm. And everyone has a giant FOMO initiative. So what we do here, Jason and I, is the vast majority of our portfolio is long-term. And I mean, we'll buy large positions. Sometimes they move short-term. But the amount of money we put in short-term we talk about on this show is nominal compared to our long-term investments.
Yeah, when we're putting on these, like, for example, today, I'll give you a prime example. I'm out there in the office. Todd's in his office. I said, hey, Todd, RCON, let's buy 50,000 shares at $6. Boom, we get 50,000 shares at $6. We go to Jack in the Box, grab ourselves a burger, drop some food off for the folks over at the house, and come back. Boom, RCON's at $6.30, $6.50. We make a misclick. We sell some at $6.30 for 30-cent profit, 35,000 worth. We intended to sell at $6.50, but that was just a simple mistake. We held the rest at 15,000 shares. We sold the rest at $6.80. And then when we came on air, it was back down to like $6.10. And so that was just a quick scalp, a quick day trade on a stock that had been beaten up. That's just short-term noise. But over the long haul, Todd taking these 13D positions, Todd looking for undervalued assets in the stock market, it turned out to be really well. And he identifies them. And then once he has the complete picture, he goes and attacks them. And that's wonderful. And I know, Marshall, you do that in the real estate realm,
Yes.
right? Yeah.
Yeah, you guys are also pros, and you have portfolio that's short-term and you have portfolio that's long-term. And even for the guy watching, if he's not necessarily a pro, he should take that approach, have a short-term approach and a long-term approach, and he's going to be very happy that he did.
But, I mean, yeah, go ahead, Joe.
But don't you think that the younger generation, I mean this, like all the people that are doing Wall Street bets and those people, there are studies out there now that actually say that attention span is moving. Like, we used to be an attention span of adults of like 5 to 6 hours. Then we moved to 30 minutes when the internet started coming on board. And now they're saying, our attention span as adults is 12 seconds, and like Gen Zs are like 2.5 seconds for anything. So anything that catches their eye, it's got to catch them quick, and then they're in, and then they're out. I mean, do you think social media is driving some of this?
Oh, definitely. It's funny that you just cited that because I just heard those same exact stats, I believe last week, and it blew my mind because I was ignorant of it. And it definitely is our culture and our social media that's helping driving it all. But I will say this though, I think once you get burned, then you realize, okay, maybe I need to plan a little bit more. Like once you go bust and you lose it all, once you put your hand on the hot stove and you get burned, you go, you know what, maybe I need to increase my attention span a little bit. It's almost like
Pain teaches.
times have been too good that have allowed us to have such instant gratification. And because of that, we're going to end up in times that aren't so good that are going to force us to kind of go back to some of the basics, I think.
Hey, I apologize to everybody out there watching them. They say I got up and I'm using my phone. I apologize. I'm not being rude, not attempting to be rude. Obviously, I'm involved in one of the biggest transactions I've ever been involved in for myself and for my friends, family, colleagues, and investors, and that is the ALZN IPO, which was filed. I can't comment on the IPO. You can go to sec.gov, type in ALZN or ALZN, which is the symbol, and you can learn about what's happening and read the prospectus. I appreciate all the questions. I've never gotten so many texts in my life or questions about something like this. And of course, obviously, it's important because they have two drugs that they hope to be in humans and helping people with Alzheimer's someday. So with that in mind, I apologize to you, Marshall. I'm sure you saw me walking around.
No, that's okay.
Not a lot I can do right now.
You. Congratulations.
Appreciate it. So where were we?
We're just talking about instant gratification and how people aren't really highly skilled in making money and trading in a bear market because we've been pretty spoiled. One thing to keep in mind also, in the geopolitical sector of life, and as Marshall's a little frozen there, we'll get Marshall back. Geopolitically, that also gives people outs, if you will. The 24-hour news cycle. It's something that may have been on the 6 o'clock news back in the day with Walter Cronkite or Dan Rather would get exclusive coverage, and then there wouldn't be more coverage until the next day. Well, guess what? The news cycle moves so fast now with social media, with 24-hour news. You can get in and out of trouble so quick. You could do something really bad, and then something could usurp that, and then they're just on to the next thing. So,
yep. Hey, one of the reasons we're excited about Marshall being on the show is we're going to be talking about the macro, sort of Marshall's macro view of things. We're going to cover real estate. And I want to, before we let Marshall get into kind of his thoughts on what he's going to cover, I'll tell you a few stories. Those of you who are young and watching the show, I've had the luxury of investing at a very young age. I was really into kind of the Warren Buffett, Benjamin Graham mentality when I was a young kid, really 11, 12 years old and beyond. And I got a chance to buy a piece of property in Arizona, in Phoenix, Arizona, on Camelback Road. By the way, everything's on Camelback Road, so I can just say Camelback Road. You guys all know where it is, right? Yeah. I bought a condo there, paid $79,000 for it. I believe the payment was with the association was $679. The renters paid me $1,100. I rented it out to them for almost 10 years, depreciated the asset, paid the mortgage, sold it for $152, which was stupid. Should never sold it. There's nothing more powerful than owning a hard asset that's compounding. And I'm a big believer in renting to affordable housing. What do I mean by that? I mean renting to people that need a little bit of a break in the sense that they want a great place to live, but they want to pay, they got their budget's $900, under $2,000. I'm a believer as an investor, there's a big demographic in the middle where they need to be able to rent a nice place, a place that's safe for them, an area that's safe for them, but the rent is reasonable. Now, as an investor, you could go buy a place where the rents are $8,000 a month, but the people that can afford those things are few and far between. There's less and less people. But I want to rent to the masses, not the classes. This is a Tillman Fertitta, and I apologize for stealing that from you from Tillman, but hey, whatever. What is it? Imitation is the best form of flattery, whatever.
Yeah, sure.
So Marshall's going to be talking about housing, multiple family housing, and everyone involved in this show is going to have a chance to invest with us. We put our own money where our mouth is. Marshall, what are your thoughts on the current market, and what are your thoughts on you joining us with the macro?
Well, first of all, I'm excited to join you guys and be a part of it all. I think we have an amazing platform to help a lot of people and kind of change the landscape a bit. And I think that's exciting. And the Risk On Army is incredible, and we're just going to grow it, and especially with the conference coming soon. So I'm excited about that. But I did notice that there's always comments every episode about real estate. So, and we kind of don't get into it, but I'm happy that we kind of have a segue now. Someone asked, real estate or crypto? And I want to answer that because my answer is both. The way I look at real estate, and I think it's how I naturally looked at it. No one has really articulated it this way, but this is just kind of the way I see it is real estate is a pure debt instrument. So when I think of debt instruments, I think of something like a bond. To me, real estate is a bond, and the cash flow that you get from real estate is like the coupon you'd get on a bond and the appreciation you'd also get on a bond. The difference is with real estate, you have the ability to control your cash flow and increase the coupon that you'd receive, whereas in a bond, you can't necessarily unless they cut rates. But I view it as a long-term debt instrument, and I've always viewed it that way. And recently, I'm starting to view it in a little bit more of a libertarian kind of point of view, as a vehicle, an asset for freedom, because the normal person is getting priced out of home ownership. It's as clear as day, and which isn't necessarily a bad thing for the masses, because multi-family apartment complexes provide a tremendous amount of benefit for people who can't afford home ownership. And in that asset, they have a pool and they have a gym and they have all sorts of amenities that if they had a home, they'd have to pay an extra expense for. In many ways, their quality of life increases aside of home ownership. They don't own the asset, but their quality of life increases in many respects. And I think the people who are going to be renting in the future have a shot at owning an asset vis-a-vis crypto. Because typically the wealth builder in our country has been real estate. And I do believe that the regular person is getting priced out of it, but crypto allows the regular person to also own property. And that property asset is crypto. And so I don't see it necessarily as a net loss that people are not going to be able to afford real estate. I feel like there's another alternative for them.
Hey, Marshall, yesterday someone had brought to my attention, I want to be very specific here. Actually, I want to be very general, Someone brought to my attention the idea of tokenizing real estate, specific assets with tokenization. Yes. What do you think of that idea?
I think it's fantastic. It's going to be something that is going to need to, the public's going to have to be educated on it. But once you understand exactly what that is and the benefits therein, it's a complete game changer. It makes a hard asset that is illiquid, it makes it extremely liquid immediately. It allows you to get in and out of a hard asset position at any given time if you tokenize it. And it also allows the capital raise to be that much easier. And it will afford greater opportunity for people to be involved in that asset class if you can tokenize the debt instruments, the debt assets. So I think it's great. It just needs marketing. It needs salespeople. It needs educators to educate the public on it because it's such a foreign idea.
Yeah, this tokenization idea where you can buy a token and say own an apartment building, it's an interesting way of underwriting. I'm investigating it. It's been proposed to me, something I still don't understand, because what's the difference between that and owning a stock, other than maybe you don't need a transfer agent in the same way you can just do it by crypto, I guess. So this is what's even more interesting to me is you can tokenize the real estate, and if they want to, they can buy the token with Bitcoin, or Ethereum, which is really like spinning my head around in a circle.
And they get the benefit of a real-time market price on that asset, which real estate currently does not have.
Right.
a market price is, the way you get to a market price is determined by comparables and whoever's willing to buy.
Sure.
Tokenization affords that. On the Connecticut deal that you and I discussed that I presented to you a year ago, it's a $50 million deal. We were going to tokenize that capital raise. And the company that we were working with, I just didn't like the fees that were associated with it, and I decided not to do it. But I was wholly educated in it at the time, and it's a 360 win for everyone involved.
Yeah, I will have to get my arms around how that would tokenize. Joe, what do you know about it?
Yeah.
I'm just curious which you'd tokenize or coin, right? Would you, personally, I think that if I'm thinking about it just off the top of my head, you end up tokenizing like a syndication deal, so people are getting into the syndication?
No, this would be like the whole asset would be the owners, the equity owners would have a token against the whole asset.
So how do you skirt the rules the SEC are looking at that being a security, not a token?
Because it's real estate, and real estate, if you own it directly, is not a security.
But they don't. But the token part of it, coin part of it might work, but the token part of it would still, in my mind, at least in thought, possibly be. It's not direct ownership, right? It's owning a security like you would a REIT.
No, it is direct ownership of the asset. In fact, I could show you the information that I have on it.
Oh, I would love that.
I have to dust it off a bit, but and there are firms that do it. So at least the idea of that. Look, this is a new space, right? So
I think it's brilliant, honestly.
yeah, it's brilliant. It's something that needs to be investigated, and this ecosystem is continuing to grow. And I'm going to be a guy who leads the charge in that. But aside from the tokenization and what I was talking about earlier about the regular guy being priced out of real estate, syndications afford him an opportunity to get involved in it now as well. So aside from the tokenization. So I think that is something that is proliferating, syndications on real estate. And especially if someone's willing to do a Reg A, not just a Reg D.
Right.
And that affords a massive opportunity to people, which that opportunity hasn't really existed in prior times and decades. And that's something that here at Risk On that we're looking to investigate further and bring to the market, to the people. And it's an absolute home run.
Well, couldn't you just off the top of my head, couldn't you, like some of the exchanges, tokenize, let's call it tokenize your asset, right? And then to buy into the asset, you're trading Bitcoin for your asset and back the other way, right? So there's an intermediary coin, which makes it not a security for sure, right? And that's how you're buying into the syndication, through the coin. So let's call it the Marshall coin, right? And if you buy with Bitcoin, Marshall coin, you end up with Marshall property.
Yeah.
He texted you.
Yeah, I apologize. My son is.
Hey, we might just go to my screen quickly in the next few moments, just because I wanted to capture Chase Ault on the
we're
podium here
we're in
at
the middle of
UCLA,
it, aren't we?
graduating.
There we go.
Can
Right.
you put
We're
it on
just
the
getting
big
ready.
screen?
I want
be
to
on the
capture
screen
that
the
on.
whole
I think he's
time.
coming up here.
Yeah, so
Yeah,
just I wanted to talk a little bit about.
we'll have to go quickly when he starts to walk.
Yeah, we will. Looks
Cool.
like Bitcoin's making a move here.
I told you I thought it was going to be 40,000 by the end of June, but that's just a guess. Educated, but
Yeah.
a guess.
Well, they just got. They're having a nice meeting up here on the podium. That's pretty cool.
Must be like the football team or something.
I wanted to look at a few stocks. We got 2 minutes left in this segment. A couple of ideas for us that we've traded in the past. Swing traded FCX, Freeport,
He says 5
McMorran.
minutes.
Oh, okay. FCX actually is. Let's just take a look at it real quick. This is a huge copper company. Most of their stuff's here in southwest states of Arizona and New Mexico. I wanted to see here. Let's look at the chart real quick. All right. Full disclosure, there it is, Nick. So with FCX, Freeport, McMorran, they've got they're the second, for either the first or the second largest copper company in America. It's either them or Southern Copper. I think it's them. We're going to look at the 1 month chart here. We actually took a position. Actually, let me go a little bit further out. We actually took a position in the mid 30s. I think somewhere right around here. back in April, and then we actually took that position and sold out of it around 41, 42-ish. It's after hours. It's $40.90. Copper is well over. It's been hovering around 450 up to 480 a pound. I see a bullish outlook on copper for a while to come. It's used in a lot of the electrification stuff, EV. It's a great conductor of electricity. So there's a lot of pressure in actually.
I apologize. I love copper too. It feels like we transitioned from that syndicate thing really quickly. Because did I throw you guys off or something?
We
the
talked about
college
real estate
thing.
for like 10 minutes.
I'm sorry. I can I just do me a favor? I'll come back to Freeport in a second.
Yeah, go ahead.
And I apologize to the audience for doing this. I'm distracted. My son is graduating from UCLA as we speak. I'm watching him walk. I'm not allowed to be there because of COVID, because apparently there's still COVID at UCLA. And so I'm a little distracted, and I apologize to everyone in advance. But Marshall, I want to touch back to you. You said something important about syndication. That is, I know you're not a fan of you're a fan of Reg A. You're not a fan of the idea of when you go with non-accredited investors. I wondered if, what your thoughts were there about that, about taking non-accreds in a Reg A format.
Yeah, well, my opinion on that's changed basically sitting with you, because you're right. I was initially, when we discussed this, hey, I'm not interested in non-accredited investors. They're going to be a headache. But after kind of like going through the mental jujitsu of my position here and the philosophy that I recognize that the regular guy is priced out of home ownership, you said to me, I want to provide an opportunity for the regular guy. I want to have affordable housing for people. Like, you were the person that changed my mind on that. And you said, listen, it's worth that. It's worth whatever headache that we have to go through to be a person who could provide an opportunity for the normal person to change the trajectory of their life and have the dignity in home ownership or real estate ownership. And then I went home that night. That was the other night when I met with David and I met with Ken and I met with Henry. And then I went home that night and I thought about that, and it resonated with me because I realized that I was basically contradicting everything I was saying. I was saying, hey guys, here's an incoming tidal wave. It's going to completely erode what the ability that your parents had that now you're not going to have. Oh, and by the way, we're going to present this opportunity for more rich people. And I realized, man, I was totally looking at it the wrong way, kind of more of a selfish perspective. You helped me change my mind on that. And so, us being able to do that and going through the regulatory machinations that we will have to do in order to do it is going to be a massive benefit to people who typically are boxed out of these opportunities. And so, my hat's off to you for it.
Hey, well, I mean, it is a problem. The problem is that the old philosophy in this, and I get it really, is that when a person can invest $5,000, it means everything in the world to them, right? Is Marshall frozen? Can we hear Marshall?
Marshall.
Yeah, I can hear. I'm here.
Okay, you're frozen on the screen, but we can hear you. Good. Okay, so as long as we can hear, that's fine. The person that can invest $5,000 is stressed about that $5,000, and real estate, inevitably almost makes you be long term, and that's probably why the compounding effect works so well when you do it right. So I'm all for non-accreds investing through Reg A or through mechanisms that allow non-accreds to invest, but you got to make sure you get the right mentality, its mindset, because I see people. I mean, listen, the problem with the stock market today is unrealistic. If you have $5,000, you're hoping to flip that into 10 in a week with one of these meme stocks, YOLO. Whereas you go into real estate, and if you're compounding your $5,000 at 8% a year compounded plus appreciation, I mean, that's a great return, solid return in real estate. So, but we are going to bring more syndication. Myself, Marshall, Jason, Andrea, and others are finding properties that we are buying, and Marshall's an expert in this space. And I was involved in the REIT community. I've been involved with REITs for 30 years, so I'm looking forward to it, man.
It's going to
I'm
be
looking forward to
interesting.
syndication. Marshall, any final thoughts on syndication before we
Marshall
move to the
just
next
jumped
topic?
off real quick.
He jumped off?
He'll be back. Yeah, he'll be back.
Okay, well, we'll pick this back up. Now, you're probably pretty happy. We are transitioning to Freeport McMoran. You're happy that probably pulled back. It's a 10% pullback, right?
Yeah, I like the entry here. That's fine.
You think it's getting stronger?
Yeah, I really like the company. I mean, there's so many things that are going on throughout the world. One thing that is actually good for the overall global market is there was a huge strike, copper labor in Chile, and they just reached an agreement there. Chile is, I think, the largest copper producing country in the world. Actually, it's the second largest mine in Chile, and they just reached an agreement there. A couple of resources for you to do a little bit of research on copper itself. Pretty cool site, aheadoftheherd.com. It's like a peak copper site. It tells you everything you want to know about copper. You can check that out. And then, of course, if you here's something that is forgotten a lot of times when you're checking out companies. Dude, just go to the company's website. Like for example, right here, FCX.com. Just go to the website. Like, why are you looking at all these third-party, media outlets with a bias? I mean, just go there, read all the filings, look at all their stuff. They got a really nice site here, and so that holds true for any company. Just check out their.
That's
website.
called due diligence,
Yeah.
Jason.
A lot of
Most people don't want to do it.
It goes back to the 100% like GME. $500 YOLO options. They don't even care.
When I was growing up, early in my career, my manager told me people will spend more time on planning their vacations than they do their stock portfolio. And I said, no way. And then as over time, I learned that no one really does any planning with their stocks.
It's actually way worse now because the kids don't get into not even a little bit of the fundamentals. They go to Wall Street Bets, look at what stocks are being talked about the most, and go all in.
They do.
I mean, and then these kids are like, look at my portfolio.
1 minute for Chase.
$500,000, and today I'm at 40,000. Ha ha ha! I'm a holder.
Yeah.
Yeah.
Hold
Yeah. Are you a
exactly.
bag holder, maybe?
Yeah, exactly.
I mean, you're holding heavy bags. You've seen those memes where they have like the Olympic power lifter. I should pull that up. And they
Yeah.
got, instead of the power of the
Diamond,
bar with
yeah.
the weights, they got like 2 sandbags, and they go to like pull it up, and then their arms like fall off. Yeah, that's like bag holders galore in all these stocks. Try not to be a bag holder. As we're looking here at, I think he's probably next.
He's coming up.
I bet he's next. So,
So you don't believe in the hold on for dear life philosophy?
no, but I mean, if you are entering into a stock with only 1% of your portfolio, and then you think you had a bad entry, but you believe in the stock and nothing's changed in your mind fundamentally, then I wouldn't be anti-averaging down. If your plan is to hold for a certain target, but you got a little bit anxious on your initial entry, or you might have fat-fingered your initial entry. You got a little anxious. You could possibly average down there. But overall, it just depends on what you're trying to accomplish if you're a day trader, if you're a long-term holder. That's all.
Yeah. AL. I see it. AL.
Yeah.
For sure. Yeah.
So,
Well, welcome back, Marshall. Sorry you got a little disconnected. It's
Yeah,
the virtual nature of
Just
it all.
log back in.
Right. Anyways, it's interesting time here. Hey, if you're listening to the radio, check us out. You can find us at 949-799-1831, 949-799-1831. That's our text. If you text us ROS, that's Rick's on Sports, which we talk about later today. You can get the picks from Jason. If you don't follow us, you're going to want to know what Jason does in baseball. It's amazing.
not lately. I've been getting crushed.
Have you?
Yeah, we're on a losing streak, but it's no big deal.
Everyone has a losing streak, right?
Yeah, no big deal.
But you're winning. You have amazing winning records.
Well, I mean, Aroldis Chapman last night was in the 9th inning. He had a 3-run lead. He gives up 2 bombs to Josh Donaldson, Nelson Cruz, 2 really good hitters. But the Twins walk it off against the Yankees and their solid bullpen, which was unexpected. But it happens. I mean, you just move on to the next bet. You just take a look at the stuff and believe in what you're looking at with the fundamentals. That's all.
Marshall, what do you think the market looks like, for your opinion, for the second half of the year? I know we're in the middle, kind of getting towards the middle of June. The biotechs are on fire. Ever since Biogen and these other lots of biotechs are on fire. It's kind of almost everywhere. What I mean by this is the market itself, and if those are people on the radio, if you looked at a chart of the market, it's been kind of flat the last 2 months or so, right? And you got a lot of stocks like Amazon, Google, and others that are kind of flat for the last year.
Yeah, and what about the announcement on those stocks today?
What about them?
Oh, yeah.
Oh, you didn't hear?
No, you didn't hear?
No, I'm a little busy doing something.
I get it. So Congress put forward a bill to split off an actual law that says that they're going to have to either split the companies in two, or any of their private label have to completely shed.
But be specific for what companies.
It-
That's too broad. What are you talking about?
FANG stocks, right?
Yeah, specifically,
Facebook,
they're going after
Amazon.
Facebook, Amazon, Google.
Yeah.
They were the named ones.
What about Netflix? They're not-
Okay, well, can we get more specific? Marshall, are you aware of this? Because is there a law that someone's proposing, a congressman or
Yes,
congresswoman?
it was proposed in Congress.
Okay, and who proposed it? Republican?
No, it's a bipartisan commission that proposed it.
It's bipartisan.
Really?
That's interesting.
Huh.
I wouldn't expect that to actually
Yeah, I'm
pass.
pulling it up. I got it on. Oh, here it is. It's on my Wall Street Journal on my phone.
Because those social media companies and giants, they buttress and support the current regime.
Yeah,
Yeah.
It's kind of worse than that though, because this is from the Wall Street Journal. House lawmakers proposed a raft of bipartisan legislation aimed at reining in big tech, including a bill that seeks to make Amazon.com Inc. and other large companies effectively split into two companies or shed their private label products. The House bills announced Friday amount to the biggest congressional broadside yet of a handful of technology companies, including Alphabet Inc., Apple Inc., Facebook, as well as Amazon.
Yeah. I could see Amazon with the white label for sure, because they're nefarious with that. They'll put up an image of a branded product and you'll buy it and they'll send you the Amazon brand. They've been doing that in kind of intercepting and doing that for a while. That's kind of a slap on the wrist though. I don't think that would hurt them in profits and on their balance sheet in a meaningful way. And it kind of would make the Democrats look like, okay, at least we tried to do something to rein in business, but even though it was kind of a slap on the wrist.
Well, but the bill goes, so the talk anyways, the article I read before this, the talk is that part of the bill, you know how they bury stuff in every bill?
Sure.
Is part of this bill will be no anti-competitive practices either. So like Amazon
There's
saying,
existing laws for this. This is nonsense.
I'm just saying it was
And why
put forth
It's a
today.
slap on the wrist, I think. You know, but what about the markets though, Todd? The markets are looking, the reason why they're flat is they're looking for money, man. They're looking for big revenue numbers, or which I don't think they may necessarily get. I think that they're waiting for another injection of money from the government.
Helicopters are
And
flying.
if that occurs, if we do see that come around the back end of this year, then you're going to see the market go up. I think that the market still has some room to go up
Right now.
because it's disconnected from reality. And we know what makes that market run. It's profit numbers, massive speculation and exuberance to one side or the other. But when the government starts writing checks and injecting money into the system, it loves it. And I think that might happen later this year.
Hey, so Marshall,
Everything else is
my
noise.
son is a football player. He played for UCLA. He started when he was 5 years old. He told his father that he wanted to go to UCLA to play football. Had offers from all over the country to play football. Played at Mater Dei on a high-level championship team. I think he only, in his entire career, lost 4 or 5 football games, 2 of which were championship games. He played strong safety, quarterback, even running back. I watched him one season run 23 touchdowns. 6 were kickoff returns, 3 were punt returns. 3 were punt returns, 6 were kickoff returns. The rest were regular rushing touchdowns. And my boy is graduating from UCLA, my firstborn son, and he's going to be up on the screen in a second. We're all going to be able to see this virtual, right? Where it's going to happen in real time.
Yeah, it's on Jason's screen. They'll just have to bring it up.
Yeah,
We'll bring it up
definitely
for
see
everybody. Yeah, I know for everyone out there, it's probably not your interest, but it's my show, so it's my interest.
I love it.
Anyways, but one of the things I would teach my kids, and I hope everyone out there teaches their kids, is you do literally have to try to get what you want. And this is a kid who got into UCLA as a walk-on, a preferred walk-on, and didn't take scholarships at other places.
I remember that.
He decided to go to UCLA because he wanted to go to UCLA. I mean, flat out decided to go there and didn't go. He got offers from Brown, from Yale, from Columbia, who recruited him pretty hard.
Oh, I remember the talks.
San Diego, all kinds of places, and came to me and said, "Dad, I'm going to be a preferred walk-on at UCLA." I'm like, "Okay."
It was nice that you supported him.
Yeah,
I mean,
well, not my choice. It's his
Right.
choice, man.
Yeah, for
His
sure.
choice. But I mean, he just gave him their card, so while we're waiting for that, he's going to be up shortly.
Gotcha.
Yeah, that's probably delayed a second
I am
or two.
excited about Marshall and I and the team, Andrea, bringing that property to us. One of the things we're going to start doing is we're going to buy the property first, and then Marshall and I will arrange for it to be syndicated to everyone. So you're going to be able to buy property that Marshall and I and the team own, Jason and others. These are properties that we're going to own with you that you can get a monthly check on. Marshall, I wonder if you can talk about the idea of some of the deals you did. Maybe an example of the last one, which was this beautiful property in Connecticut. How many units were there, and what was the thought process behind that unit? You put together a pretty interesting deal. You don't have to go into all the details, but kind of high level.
Sure. Well, the idea behind that deal, it's over 200 units. And the idea behind that deal was it's already a trophy asset, cash flowing. It was not listed. It was an off-market deal, pocket deal. And it was in great condition, didn't require a value add. We didn't have to bring contractors in place. And so in order to kind of shake that deal free, we were creative with keeping the owner in and assuming some of the debt, and also paying off his limited partners and keeping him in on the new deal so he gets the upside appreciation and cash flow and also gets paid out. So kind of takes away a lot of his headache. And, that's from the deal making side of it. But, the great thing about that deal is it opened up opportunities for investors who were looking for inflation hedges to now own an amazing property that has been cash flowing for 10 years and will continue to cash flow and cash flowed throughout COVID and has appreciated. And they've received the tax benefits therein the entire time.
Absolutely.
So, it was a fantastic deal. And it's those type of deals that we're looking for now, that we're putting into contract now as we speak. And we're going to make available for people to be partners with us on.
Hey, Skyla, we only got 4 minutes left before the radio show ends.
Yeah.
And of course, I don't want to miss the joke. But remember, it's the radio, so is it a clean joke?
Yeah, it's good. Yeah, it's good.
All right, let's go, Dad joke.
All right. So, did you know that?
Hey, here we go. Go live, Nick.
Go live.
Nick,
Go
here it
live.
is.
Oh, just kidding.
Go, Nick.
Chase.
Sorry.
There he
you go,
is.
brother.
There's my son.
Nice.
Nice job, buddy. That's great.
We got him on Risk On.
Did you?
Yep.
All right, cool.
All right, I appreciate
Congratulations.
everybody. Yeah, thank you guys so much.
Nice.
Skyla, let's go to that joke. All right, it's awesome.
That was
Oh, I'm so
cool.
proud
We got
of
to see him.
him.
We had to wait all that time right
I
to the
know.
end to see him.
So, did you know that milk is the fastest liquid on Earth? It's pasteurized before you even see it.
It's pasture. Oh,
It's
wow.
past your eyes before
That
you
was
even
good.
see
Dude,
it.
that was great.
Oh, that's a good joke.
Thank
That's a
you.
good dad joke. That's a good quality dad joke.
That's a.
Hey, Marshall, I know that you have not. I don't know that you've been on a lot of our radio shows, but for the radio listeners, could you give them kind of a 30-second to 1 minute background about who you are and what you've done? I'll give the promo that you've built over $2 billion worth of property yourself in Manhattan and the New York area. And I know your family's in the multi-billions of dollars of property. Can you give us a quick overview?
Yeah. My name is Marshall Wilkinson. I'm from New York. I've been with Hazen & Sawyer, Nautilus Consulting, and COO of Eldor Contracting. I've been in our family business is construction. I've been a construction manager, consultant, and contractor. Like you said, I've done over $2 billion worth of deals. And I'm a real estate investor and developer. And I also have an education business where I teach executives, salespeople, how to better their business, make more money, sell better, negotiate better. That's my specialty. And I'm happy to be here with you guys on Risk On, take it to the next level.
We are glad to have you. This is going to
Thank
be
you, man.
really, really
Absolutely.
fun. We're going to be able to dig in. I'm going to learn a lot from you on this real estate side. I'm pretty excited about this.
Awesome.
It is.
man.
Hey, can we get Randy real quick? Is that possible, Skyla?
Yeah.
Hey,
Yeah,
Joe.
yeah.
Hey, what's on your mind for the weekend, my friend?
Got a party going on tomorrow at the house. A lot of people coming over. We're just gonna pool it.
For your birthday, 41 years old today.
I like that. 41 years old.
Hey, I do apologize to everyone. I've been a little distracted, as you know. We did file to bring ALZN public. Check out the prospectus. Can't give you any details, but you can find it at ALZN at the SEC.gov site. Randy, as this is the radio show for all you on KEIB 1150 Los Angeles and Orange County, check it out. 949-799-1831, 949-799-1831. Type in real estate or just say hello. I'm interested in real estate, but prefer to type in real estate, and you'll get on our list of people who are going to be part of our syndication and the training that Marshall's going to be providing with his billions of dollars of expertise. Randy, you got 30 seconds, my friend. It's a strange show today.
Dude, it's a beautiful Friday in Sin City. Happy birthday, Crypto Joe.
Happy birthday to you.
you.
Hey, what happened to Golden Knights last night?
Golden Knights won. They wiped out the Avalanche 4-2.
Yeah, they did.
Yep.
Playing the Canadians starting this Monday. And IndyCar doubleheader coming up this weekend in Detroit. Look for Grosjean to do something good there.
Hey, special thanks to Marshall Wilkinson for joining us from Zoom. I appreciate everyone being patient with me. I got a day job. I work a lot. Happy birthday to Crypto Joe. Jason, my friend, we're going to hook up. We haven't gambled in 2 weeks. Nick, everybody, Brett, thank you so much. Marshall, we'll see you in studio Monday. It is the 11th of June. It's a Sunday if you're on the radio. Everyone take care.